All right, what is going on YouTube? Welcome to my channel. My name is Jon Fibonacci, and in this video, I want to show you exactly how I got funded with Topstep. If that sounds interesting to you, then watch this video all the way through. All right, let's get right into it. How to get funded with Topstep. All right, let me take the camera off so that you guys can see the two different funded certificates that I have. This one is from August 16th of last year, and I got a second one yesterday on May 12th, all right, 2025. Today's the 13th, so this was yesterday. This video will probably be released tomorrow, but those are the two, all right, from August 16th and from May 12th. All right, so number one, understand what Topstep offers. So Topstep is a proprietary trading firm, aka prop firm, that funds traders who can demonstrate consistent profitability and proper risk management. They provide access to capital for trading futures and Forex markets, allowing traders to keep a portion of the profits they generate. So at heart, I'm an index trader. Sometimes I do trade the metals like gold, for example, sometimes silver. I don't trade currencies a lot, meaning currency futures. I mainly stick with the Nasdaq, S&P, and the Dow Jones. All right, but on a personal note, okay, prop firm trading is not for beginners. If you don't have consistency, I would recommend to wait until you have results in a demo setting before going into prop funding. If you pay for challenges before you're ready, you will likely waste money and end up frustrated. Make careful consideration before deciding to become a funded trader. All right, moving on to number two, register for the trading combine. Select a trading combine account size that suits your trading style and goals. Different account sizes have varying profit targets, daily loss limits, and monthly fees. Sign up and pay the monthly subscription fee associated with your chosen account size. This fee grants you access to the trading combine and covers the evaluation process. So let me pull up the website real quick. All right, here is topstep.com. When you click on like start a combine, these are the three different options. You have the 50K, both accounts that I have are 50K accounts. All right, $49. It used to be about $165. They've been at these price levels for a couple years now, I think, or at least more than a year. But anyway, the profit target for that is $3,000, max position size of 5 contracts, and a maximum total loss limit of $2,000. The 100K account is almost $100 a month, a profit target of $6,000, 10 contracts maximum, and a maximum total loss limit of $3,000. And 150K, almost $150 a month, a $9,000 profit target, 15 contracts total with a maximum loss limit of $4,500. So if you were to ask me like, oh, John, what do you recommend? I recommend starting with the smallest and then working your way up later. So if it's, if you can't really handle the big money, if you will, in relevance, I would just start with the smallest one and then work your way up. Okay. Those are the three accounts, and 50K is the smallest one. All right. Part 3, trading. Tips for success. Develop a solid trade plan, which means to have a clear strategy and stick to it. Strict discipline. All right. Risk management as well. Follow risk management rules diligently. Avoid over leveraging or over trading as well. All right. Maintain control. Stay calm and composed, especially during volatile market conditions, or at least control your actions. Okay. Sometimes, I'd say a lot of times, all right, as humans, we're emotional, right? We don't really get to control our emotions, but we do get to control how we respond. So, you can be angry at somebody, but not cuss them out or, give them the middle finger in traffic, right? You can be anxious about a trade or nervous about a trade, and you can still hold it, if it's a winner. So again, we don't really control our emotions, but the decisions that we make shouldn't be based on emotions. They should be based on logic. Okay. So you control your actions. All right. Start small. Focus on consistency rather than big wins during the evaluation phases. Now, I've recorded trades. I've shown my community, the Smart Money Stoics community. I've shown them, really big trades, capturing a day's range and stuff like that. But I talk about this all the time on the live streams. I do live stream 4 times a week right here on this channel for free. Okay. Monday, Tuesday, Wednesday, and Friday at 1 p.m. Eastern. All right. And I show all the time that you don't have to hit home runs. You can hit, base hits, first base, second base, third base, stuff like that. The point is growing an account, not always hitting home runs. Okay. And I would say review performance. Regularly analyze your trades to identify strengths and areas for improvement. Now, this can be seen in the Topstep X platform, where you can look at your analytics, equity curve, stuff like that. You can kind of see where you're doing well, where you're not doing well, so that way you can know where you should fix your mistakes and, what to focus on, basically. Okay. Now, here's a example strategy. All right. You don't have to copy this exactly, I would say. But I've taken trades like this that help get me funded. So that's up to you. But again, for video's sake and for legal sake, this is just an example. Okay. What I would be looking for is low risk, high reward setups. So 1 to 2 is an ideal minimum. For me, 1 to 3 is ideal. Sometimes I do take trades that are 1 to 2, but either way. And if I cannot frame a 1 to 2 minimum risk reward, then that trade's probably not worth taking. Have I taken 1-to-1s before? Oh, of course I have. But most of the time, 1-to-1s are just simply not worth it. Okay. Especially if you do the math. Mathematically, it's just not worth it. All right. Number 2, the target that I look for is low resistant highs or low resistant lows, or equal highs or equal lows. So there's 4 different targets right there. And if that sounds familiar to you, that's because this was also in my free beginner series, which is a playlist right on this YouTube channel if you have not seen it. Those are targets. Those are easy targets, in my opinion. Okay. Low resistant highs, low resistant lows, equal lows. And then we could also look for targets that are coupled with previous day's high or previous day's low. All right. Not required, but it is good if they are. All right. In this video, I'll be talking about the entry model as a mitigation. Okay. Some people in the, world of trading would call something like this a breaker. It functions like a mitigation. I call it a mitigation. So I won't get into it, but I'll leave it at that. Okay. So what I'm looking for is a mitigation that also has an imbalance that overlaps. Okay. So the imbalance doesn't have to be inside the mitigation. One can be inside the other, or they could just overlap at some degree. Okay. I would also say that mitigation and imbalance overlap must be in a discount or the discount end of a premium. Now, if you don't know what that means, I would say just keep it at a discount, meaning if you took a fib tool and measured from, let's say we're long or we're looking to long, the measurement would be from the highs as the target down to the low that's been set. And so I want to look to enter at 50%, ideally well below 50%. That's what a discount is. Okay. It also should have higher time frame context, meaning if the higher time frame is bullish, I probably don't want to be looking for shorts. Okay. Ideal longs are below the opening price, not required, but it is good to have. And ideal shorts are pretty much the opposite, or inverted rather. Ideal shorts are above the opening price, meaning the open of the day, the open of the session, could be the open of the week, something to that effect. Okay. Number 4, risk management. And this is an example for the 50K account. The max daily loss of $1,000. So you could trade one time with $1,000 at risk. I don't recommend that. You could break that down into 2 trades at $500 each. It could be 3 trades at $333 each, 4 trades at $250, 5 trades at $200, or 10 trades at $100. Now, that's just, you know, for max daily loss. I mean, you could break this down however you want. If your max daily loss, you could change to say $500. Okay, so you could have 2 trades at 250, 4 trades at 125, right? 5 trades at 100, something to that effect. 10 trades at 50. Okay, so whatever math you want, just break it down and then, you know, follow that basically. All right, part 5, profit taking and account growth. So specifically for the 50K combine, the consistency rule says that you cannot have a day basically where it's either a day or a trade. I think it's a day where you can't have more than 50% of the total. So if your total is a $3,000 profit target, then you cannot have a day worth more than $1,500. Okay. So that would be like $1,495, I would set as the max daily gain, right? So that way it locks out, closes the trade, and blocks you from trading. That way you don't, you know, give back anything, and you lock that good day in. Okay. I would look to take partials at new highs or new lows. So if I'm long, if price makes a new high, I want a partial. Even if it's not at my target yet, I want a partial because I want to grow that account. All right. And like I said a few minutes ago, the point isn't to hit home runs, it's to grow the account over time. What I've noticed, not just like in my own trading, but even in other people's trading, because I do mentor quite a lot of people, I would say the people that do not take partials, that are just all in or all out, they tend to not do as well. And I believe they tend to get more frustrated too, versus the people that do take partials, they do well because they're actually growing accounts. Okay, so that's just based off of my own trading and based off of what I see. All right. And then the last point, move stop loss to break even once a partial has been taken, or if order flow confirms the trade is on side with price delivery. Now, I'm not going to explain probably all that here. I'd say most of you probably know what that means. Order flow confirming the idea that, you know, concepts are being respected, stuff like that. Then, you know, I could move to break even after expansion, basically. All right. Part 4 overall, expectations. And still rolling with the 50K account as an example, the monthly fee, right? $49 a month for the duration of the evaluation phase until you achieve funding, which again is that $3,000 profit target. So you can take as long as you want, but you're going to pay the fee every month. So just be mindful of that. All right. Reset fees. Understand that account resets due to rule violations incur additional fees. You might not pass the first time or the first few times. Okay. The reset fee, I think, is 50% off the first time. And then after that, I think you have to pay 49 or 100. I don't know. I don't know what it is. But anyway, moving on, the time commitment. Dedicate sufficient time to trade effectively and meet the minimum trading day requirements. I'm going to take my camera off one more time so we can see this bottom part right here. Okay, here's like the final note. Becoming a funded trader with Topstep requires demonstrating consistent profitability and strict adherence to risk management principles through their structured evaluation process. With dedication, discipline, and a well-defined trading strategy, you can leverage Topstep's resources to advance your trading career and access significant trading capital. And that's basically it, okay? There's 3 pillars to trading success. Number 1, that's your edge, your strategy, buy low, sell high. Number 2 is going to be your risk management, small losses, big wins. And the third and final pillar is to implement the previous 2. You need trading psychology skills, like Mark Douglas talks about, the skills to implement the previous 2. All right. So one area is not any important than the other. all three are important. You can't have 2 out of the 3. It does not work. Okay. So with that being said, hopefully you found this video insightful. If you did, drop a like on it. I would greatly appreciate it. Consider subscribing if you're not subscribed already. It would be appreciated. All right. So thanks again, and I'll see you in the next one.